Hey guys, here's a quick video on balance versus imbalance and a great setup that we can find using pretty much any stock, right? But I'm going to be using SPY as an example. So, Friday session. It was overall a very choppy session. We did grind its way down to the annual trend line support, which is this green line here for me. From a larger perspective, this is the green trend line that we sort of tapped, um, attempted to break it, but we ended up holding it and closed right back above nicely. My only concern is that we closed below the 200 EMA, which is my red line here, and we also had a full 3 EMA crossover to the downside. I don't think that we can break out of this annual downtrend yet. However, this volume here is quite concerning. So anything's a possibility. Next week we do have some heavy economic data, so we'll see where everything takes us. But going back to the balance versus imbalance, there's many different ways you can put it, but basically balance is a zone like this here, where both buyers and sellers are sort of in an agreement of a price level. Correct. So without bringing all these big words and complicated explanations, whenever there's an imbalance, it creates the price to either go up or go down. If we're talking about a buy side imbalance, just think about, let's say there's a stock that trading at, for instance, at SPY 515, right? There's 10 buyers who's willing to buy the SPY at 515. However, a few minutes later, we see five more additional buyers. So that's total 15 buyers. But when we look at the market, there's only what 10 sellers, right? So there's an imbalance of buyers and sellers. There's 15 buyers and 10 sellers, right? So what happens? The 10 sellers sells it to the 10 buyers, and what happens to the remaining 5 buyers? They are willing to buy SPY at a higher price, whether it's 515.1 or 515.25. They're willing to buy at a higher price, which then causes the stock price to increase. And for the downside imbalance, it's pretty much the same thing. More sellers than the buyers. Okay. And we can utilize this on a daily basis to make trades. Of course, there are going to be other confluences that you sort of want to implement together to have a higher probability of success, such as trend line, break of structure, momentum indicator, RSI right here, and also, of course, most importantly, volume as well. So let's go to the Friday session here. So obviously, we didn't really get too much of a chance to short right at open. I mean, you don't really want to chase it, especially with such impulsive pullback during pre-market session. This was mainly due to SPY having its dividend day. So when they pay out dividends, stock prices naturally do drop. Any stock, not just SPY. Um, if you did go short at open, it ended up paying, towards the end, right? But you would have had to, wait until pretty much the midday, right? So, and you never really want to chase, right in whenever there is like this type of price action, you sort of want to wait until the corrective bounce hit. For me, this area was more. It made more sense in terms of short, and the reason why I say that, there's a orange line there. This is dating back to just yesterday, where we had a zone of balance here, right? So we have the balance zone where buyers are agreeing on a price, right? So when this reversal happened, what happened? Going back to the 10 buyers example, we had 10 buyers and 10 sellers, and then five more showed up. So those five more, not literally five, right? Obviously, there's millions. Uh, that causes price to go up, right? So this is an area of imbalance where there's going to be a lot of liquidity there, right? So my plan was wait until we can sort of get a retest of this balance zone, right? And short after any type of break of structure. So throughout the session, obviously we dropped to the trend line, we defended it, did a little reversal, right? And as soon as we tap this level, right, we created another zone of balance, right? we sort of started consolidating sideways. You can actually get a little more detail using 3 minute. We had this wick, sideways candle, not making any highs above the 511 level of the previous balance zone here. If we did actually make highs and consolidated above, it probably would have had to use the next order block, which is the next balance zone, which would be right here, right? But in this case, we tapped the balance, had a rejection wick, sideways candle, and I drew like this small trend line right here, and we eventually started to break below this small zone of balance. This isn't like the best example just because the volume was really shitty throughout the entire session, but the structure made sense. We had the rejection off of the 511 balance there, so we call this order box, by the way. On that, we also had a 3 minute RSI crossing to the downside, indicating a shift in momentum. We go to the 5 minute, we also have a cross of RSI to the downside. And lastly, also on the 15 minute, the RSI wasn't as good as a 3 or 5, but this was acceptable for me. We also had a classic rejection candle right here. Volume wasn't the greatest, but main thing for me when I was shorting was that there wasn't any buyers showing up immediately. Immediately would be something like this, where we tap into a zone and we get a strong push. Same thing, we tap into a zone and we get a strong push, right? But in this case, we didn't really get any type of buyers show up. I mean, these candles are not really buyers candles, right? And eventually we faded all the way towards end of the range again, tapped the trend line and reclaimed it again. uh, so that was my short play on Friday, but actually there's another example here that we can go over while we're doing this video. You can draw another trend line like this right here, right? And we can make another zone of balance here, right? And that balance breaks, trend line breaks, RSI crosses, go to the 3 minute, again, zone of balance breaks, trend line breaks, RSI crosses, and we move to the upside again. Obviously not the best upside move, but they did respect the balance zone here. Okay. But yeah, that's pretty much how balance and imbalance works. It does really help if you can practice on a daily basis. I do highly recommend using paper trading if you are new. Following alerts and signals are not going to make you a profitable trader in the long run, because if that's how it was, everyone would be millionaires, right? We would all trade like the top 3%, right? You have to make sure you're only using anywhere from 5 to 12% max of your portfolio. Um, there's really no reason not to follow that. And if you don't follow that, one, you're impatient. You just want to make big bucks right away. When I first started, I was only making 50 to 100 bucks a day. Two, you simply just are not in it for the long run. That's why you oversize and stop out for no reason. Okay, so follow your levels. And for Monday, the area that I'm going to be looking at would be actually the same area here again, where we saw the imbalance break. And also I'll use this area as well. So I'm not sure how we're going to open, but if we do open flat or anywhere in between these two levels, so 508 and 511, I'm not going to trade unless we can get to those levels, and we'll play off of there. If we see a break of structure after we test the 511, we're going to do same thing as we did here. And if we drop and test the 508, we're going to wait for a break of structure again and play off to the long side. All right. If you guys have any questions, feel free to comment or tag me in the Discord.